the IDA meeting to order, and Julio, would you do roll call, please?
Ms. Laughlin.
Here.
Ms. Laughlin is present. Mr. Sykes. Here. Mr. Sykes is present. Mr. Siegel.
Here.
Mr. Siegel is present. Ms. Roy.
Here.
Ms. Roy is present. Mr. Smith.
Here.
Mr. Smith is present. Mr. Gunther.
Yeah.
Mr. Gunther's on the
On
phone.
the phone. Mr. Brooks is absent. Mr. Barone.
Yep.
Also absent. And Ms. Letta.
Okay. So the first order of business is to approve the minutes from the March 13 meeting. If everybody got a chance to look, and I have a motion. That's Scott, second Ed. Any edits, corrections, discussions? Okay, all in favor, say aye. Aye. Any opposed? Okay, approved. New business. So we have no, this is special meetings. We don't have any financials to go through. The first resolution is to extend the sales tax abatement period for Empire Resort. This is a normal, well, I didn't say normal, but the typical, we do 6-month extensions fairly regularly. This project had a few. So anything we need to know about this beyond?
This is pretty much.
Yep, so there was a single request that was submitted on behalf of both projects. One is the golf course and the other is the EV hotel. So the projects changed a little bit as was authorized by the board last year to finish the golf course and to include on the hotel property what had originally been contemplated as the clubhouse facility on the golf course. So they're proceeding with both of those projects.
I'll make a motion.
Is that, just to be clear, is that for 2 resolutions, right? The first 2 resolutions.
If you'd like to move on both of them.
Yeah,
he
did. I
Yep.
did.
Okay,
Second.
and second, all in favor?
Aye.
You opposed? Okay, so that's approved.
We know how many holes were left to finish?
They're done,
They're done?
the golf course is done except for grass and stuff.
Is Kathleen, you mentioned it.
I'm gonna
Recusing
recuse,
and
yes.
abstaining on those two, okay.
They plan on it being open this year, right?
They plan on being open at some point this year, yes. Of course, their opening date was in 2018. but I'm hoping that-
Wait, can I just the point of order, just for future, so I understand? This isn't a project, I mean, they're not still in front of the planning board for anything.
They were opposed to the changes that they made to the clubhouse.
Right, so isn't that already behind us,
Yeah.
where you wouldn't really have to?
Why, if we don't get it,
Well, I think that's the point, is if necessary,
Yeah.
absolutely, but if not, just, it's more optic.
Yeah, that's fine, okay, I'm more concerned about the actual.
Documents,
happening.
yeah.
Absolutely.
Okay. Hey, no worries, Don.
Yeah.
Yeah, we have a new board member, Kathleen. I don't know if you've. It's nice to meet you.
I've got a chair here.
There's a room over here. Forgive that. Freeze.
It was the pants that got me, not that.
Okay, the next resolution we are addressing is Bay Hospitality, which is also looking for an extension, right?
A request from and with bank disruptions, to say the least, there are delays, once again with the closing. So the resolution before you today proposes that we give them another extension for 60 days. So they will have until May 31st to close. And it also includes a provision that they need to make an additional deposit into their escrow account. We've been incurring a lot of legal fees, obviously, as the project has been moving forward, if you will. So there's a requirement that they deposit another $10,000.
They've agreed to that.
They've
They'll
been
either,
informed of it.
they've been informed of it, they'll either do it or the resolution won't be valid.
Exactly, okay. Fair enough. Can I have a motion to approve the extension? Ed, second, Sean, all in favor? Any opposed? Okay. The next one relates to the supermarket warehouse. Where, well, you want to tell us about that one?
Yeah, this is, the project is with a different entity called VRR Brothers 3 LLC, which is the owner of the former Egg chicken farm. I guess that's Glenwild Road. There's a number of occupants in that building, all commonly owned by the same individual. And one of those occupants is a company called Supermarket Parts Warehouse, Inc. And they have a $1 million credit line with Ulster Savings Bank. And the purpose of the modification agreement is to extend the credit line into the future. The credit line had a termination date. This is to extend the termination.
So they need our permission to extend it?
They do because it's secured by a mortgage
Mhm.
by the IDA to Ulster Savings Bank because the IDA holds a legal title to those sites. So
Got it.
IDA holds legal title. They lease the property to VRR Brothers 3 LLC, which subleases the property to Sullivan Fabrications, Supermarket Warehouse, a bunch of other entities that are all commonly owned. So yes, they need our permission. I went through the document. There's something, I made a couple of little, I would call cosmetic changes, but everything is in order. And Susie actually has already given us signature pages in escrow, subject to the resolution.
I'll make that resolution.
I'll second.
Okay, any discussion? All in favor, say aye.
Aye.
Any opposed?
Aye.
Okay. The next item to talk about is the, our audited financial statements, which we have Andrew here to present on. What's your first, you were once the auditor before for the
Yeah, we've been here
IDA.
previously, yeah.
And, but recently,
This is the first year back.
Rehired,
This is the
first year
first year back.
exactly.
So you'll have a little handout in front of you. I just want to go through it briefly. I know you've had a chance to look through a draft of the financial statement, so I'm not going to go in detail through line by line, but I just want to briefly go through some of the changes and looking at the financials, you may have seen things that are different than previous years. Biggest change this year in government is DASB 87 was implemented this year. Has to do with lease accounting. So it really applies only to operating leases. So basically, it does not apply to any lease that is less than 1 year. And it doesn't apply to any lease where the property transfers to the lessee at the end of the lease, which should be treated like a capital lease. So basically, it's your standard operating leases is what falls under the guidance of the DASB 87. The beginning of the lease now, what we do is the operating lease receivable are recorded on your balance sheet as a receivable. So you've never seen that before. So that's a big number on your balance sheet. And if you're looking at last year, you didn't see that number. I just want to sort of explain why it's there now. So basically, it's valued at the present value of all future lease payments is what we booked that operating lease receivable for. When the lease payments are made, as in past years where you would get a lease payment, you just post lease income. Now it actually, like a note, it goes against lease principal and lease interest. So you reduce the note receivable and you also reduce the principal. The revenue is split. When you look on your income statement, you'll see it's split between lease interest and lease income on the balance sheet. So it's not all just under lease income. However, the way that we're amortizing the deferred inflows, which I'll talk about in a moment, the lease interest and the lease income will equal the same as your lease payments that you get every year. So it'll be the same thing. So it's just broken up into two.
And how do you do the interest allocation when there's no interest rate in the lease?
Well, all your leases had interest already in them. We use a discount rate. You try to use your normal borrowing rate is what you use. If there's no interest rate, you're supposed to use. You enter these borrowing rate. That could be an estimate.
We don't borrow, so that's why I was asking.
Yeah, but yeah, your leases, luckily, you already had, when you created these leases, you already had interest rates, so it's very easy. Most of our municipalities, I mean, unless it's a huge lease, if you use 3%, 4%, it's not going to change the number that much. It's all going to wash out at the end anyway. It's not going to be a material difference in what interest rate you use, unless you're talking at 8% opposed to a 2%. Like we're not going to be using those kind of numbers. At the same time, we book the leases receivable. There's also an account you'll see on the balance sheet you didn't see before called deferred inflows of resources for leases. And at the outset of the lease, that's valued at the same as the operating leases receivable. But there's no change in your net position when you book the leases receivable and the deferred inflows of resources of leases. They offset each other. And over the course of the lease, we then amortize the deferred inflows of leases. So they go down, just as the operating lease receivable goes down, at the end of leases, everything zeroes out.
What was the impetus for this change?
I ask myself all the time, when Yasmin comes up with these things, they just seem to want to make things more complicated. The old way, I thought, if you recorded in your notes, here's your obligation for payments on non-cancelable leases, either receivable or payable, you could see what the obligation was. Now they seem to want to put everything on the balance sheets. They want to put the retiree health insurance, they want to put the pension liabilities created by actuaries, and to me, it's cluttering up the financial statement with all sorts of stuff. And you make a great point. It's an asset offset by a liability. It's, really has no effect on the balance sheet, but
Okay.
they love to come up with me. I think a bunch of guys sit around and think they have a great
Yeah,
idea.
I was hoping you gave us a different answer and there was actually some magic to
Yeah.
the
No.
allocation to interest.
You can ask people in my office how much I gripe about these GASBs that come out that to me make it more difficult for the layman to understand the financial statement. It's not easier for them to understand. What layman understands what a deferred inflows of resources?
But does it affect what we have to do internally or
No,
staff?
not at all.
No?
I already spoke to,
Mumbo jumbo.
yeah, I spoke to actually, to Jen Julio about reporting and just to keep reporting. We can adjust the leases with one entry at the end of the year. Because that way, if they're posting leases the way they always did, your profit and loss is gonna look the same. The difference is still gonna be in the leasing, but at the end of the year, we'll allocate it between lease income and lease interest. But you guys are still gonna see on a quarterly basis how much money you've taken in. Rather than have them take all those leases and start allocating every payment between principal and interest, you're just asking for mistakes and errors and this stuff.
I can assure you that when we started including interest rates and leases 20 years ago, we didn't know this was coming, so we were just lucky.
Yes, yours was an easy one to do. I loved it. You had everything set up, everything was good to go.
Blind squirrel.
So the new accounts on the balance sheet, you have the operating leases receivable, the deferred inflows of resources, and lease interest is the new income statement account on your financials. The other change we made was a reclassification of a capital lease. So your SPG 26 lease has a $1 buyout at the end of the lease. So that qualifies as a capital lease, not an operating lease. So previously, when you reported that lease, like the other ones where the money came in, it was just income. When it came in, now you have to treat it as a sale when this lease was first entered into. So now you'll see on your balance sheet, capital lease receivable. Whatever gain or loss you would have had when the transaction first took place is already built in to the prior year when it first started. All you're gonna see every year is just capital lease interest is all you're gonna see on your income statement. That's all lumped in. You'll see lease interest on your income statement. It's a combination of capital lease and operating lease. But if you look in your note disclosure, it tells you how much you earned on your capital leases, how much you earned on your operating leases.
For the board who may not remember what SVG is.
Okay.
This was a lease that was assumed by SVG. That used to be Catskill Distilling Company. This came out of the bankruptcy,
Oh,
which
That's
is
the new name.
SVG 26 LLC.
That's our only one.
That's the only capital
Yes,
lease.
the only capital lease.
And we set that up as a capital lease for reasons associated with the bankruptcy.
Okay.
where does it stand for,
SVG, no.
So those are the only things that changed. So this year, when you look at your comparative statements, you'll see the changes. Obviously, next year, everything will look comparative again. So as I said, with the exception of those changes related to the implementation of GASB 87 and the capital lease, the operating revenues and expenses are pretty consistent with previous years. Obviously, your project fees can fluctuate from year to year based on different projects, sales tax fees, mortgage tax fees, things like that. But pretty consistent from year to year. And your operating expenses have been pretty consistent. You've kept them pretty consistent over the term of the last few years. Like I mentioned, you've generated significant project fees and you've kept your operating expenses fairly consistent. This little chart over the last 5 years that shows your operating revenues and your operating expenses. As you can see, you're exceeding it each year. And the result is the next chart, which shows your net position increasing over the last 5 years. Each year, as long as your revenues continue to exceed your expenses, obviously, the net position will continue to increase.
It'd be nice if this could go back 27 years when Mr. Sykes got on the board, when we had $26,000 of assets and 34,000 of liabilities.
I remember, it seems like from when I was previously doing this audit, every chart, look, every 5-year period looked like this. So you're right, it's been,
Here for
yeah,
27
yeah,
years.
it's been going up and I also remember way back when you had 3 or 4 projects and now, yeah, we had quite a difference.
How many open projects right now?
50.
He's got 70.
No, 72?
You know, Susie, back in those days, it was something that came under the board, not after we got in, but before. It took 2-3 months just to get here. And that all changed. Actually, Walter had a lot to do with that, but, you know, it was more, can-do attitude.
All that I did was listen to what you and the other board members wanted, so you deserve the credit.
And you know, if we operated now the way they did then, I don't think we could get through it. A meeting would last all day.
Really?
Oh, yeah.
That's why we should start at 7.
There you go, Scott. We could revisit that at the end of this meeting. Since Howard's freaking out about the 4 o'clock.
That's fine. We'll
Okay.
be here by 4 o'clock.
Go ahead, Andrew.
Some of the testing we do, we test your pilot disbursements, for the following, we make sure the agency fee and the pilot is correct for the original agreement. We look for the original agreement to make sure everything is proper. We make sure the calculation's correct. We make sure it's dispersed to the proper municipalities. And we check to make sure there's an FTE certification and that jobs requirements are met. And if they're not met, that there is a penalty charge. So we go for that. We have no issues in testing all of your pilots. We also look at your regular disbursements, look at your proper approvals, supporting documentation, cancel checks, posting it to the general ledger. It's just a sort of a standard testing we do of a sampling of transactions to make sure there's controls in place and they're operating. And in your revenues, we did test a significant portion of your revenues. Again, looking at the amounts are proper per the original agreement. That would have to do with the agency fees. We look for the original agreement, what you're supposed to be getting annually. We make sure that's what you got this year. Also supporting documentation, and then that is getting posted accurately into the general ledger. There's no findings as a result of our testing. We did review the comments from the prior year. I know you had some comments from the prior year, but all the items were either addressed, improved, or in the process of being corrected. So we have no issues. I mean, I don't think any of them were real significant issues last year, but most of the stuff we looked at using the paid stamp, putting certain things in the minutes, and all of that is being done. Some of the stuff I know you're working on, a capitalization policy, disaster recovery, is working. The posting into the accounting records is much better, apparently from whatever it was last year. If you look at, we have another correspondence that goes with the audit report. It's called the GASB, SAS 114 letter, where we list the material audit adjustments we had to make in each audit. And you'll see we made 7 for the whole year here, 4 of which had to do with these reclassifications of GASB 87 and capital leases, which they would have. There wasn't a lot of, one of them was the annual depreciation at the end of the year. I know that was an issue. Jen did provide me with a depreciation schedule this year. I was able to go and work with. I actually tied it into my old one to make sure it made sense going 3 years forward. She had schedules for things like sales tax, escrow, and stuff like that. So she was able to provide information. And I will say, we have questions between Jen and Julio. They swamp us with Excel spreadsheets, and they have, sometimes they have to look for it, but they have documentation for what they did. And that's all we can ask as auditors. Tell us what you did and why you did. That's great. So, we did discuss minor issues verbally with the business officer. We'll go over minor stuff and stuff like that. If it keeps becoming an issue, then, we'll bring it to the board's attention, but nothing that's, significant. So there's no written comments in the report, and you get an unmodified opinion on the financial statements, which means everything is in accordance with generally accepted accounting principles. The clean audit.
Good,
Thank you.
good news. Not that I'd expect otherwise. They always do a good job.
And who has been great?
They're all doing it good. Okay, so do we need a motion to accept the audit?
So the audit is, gets incorporated in one of the Paris reports. There's a number of Paris reports. I won't go through them. You have them unless you have questions about anything. But so when I submit the Paris reports by the end of the day tomorrow, I'm certifying that the board has reviewed and accepted the financial information that's included in the Paris reports. We pull out the audit and put it in various.
But that's been, and that's the financial.
That's what it is.
The standard is reviewed and accepted. So
We need a
this is my
motion then.
third meeting like this today.
Okay,
I think the right type of motion is not anything other than reviewed and accepted.
that we reviewed and
And
accepted
accepted
the
the financial
financial statement.
Correct.
But don't we have to approve the filing of the Paris report too, or no?
I have to tell, when I hit submit, I'm telling the state that you have reviewed and.
Okay.
So what did I sign? I signed, John,
So
I
that's-
signed that we've agreed, that we,
Separately, the CEO and CFO there's a certification that they sign that says that to the best of their knowledge, the financial information is correct and accurate.
Right.
did it,
Right.
right?
Right.
So it said to the best of
My
my knowledge.
knowledge, yeah. It's pretty low standard. No, just reviewed and accepted, that's all. We reviewed and accepted the annual audit report prepared by Cooper.
Okay, can I have a motion?
I'll make a
That
motion.
Howard, a second, all in favor? Any opposed?
Andy, could I ask you a question? Sure. Before
Okay,
you,
138.
you're getting ready to leave, right?
No, I think I'm staying for am I staying for the other two?
Yeah,
Okay, yeah, so
I see there's a list of all our projects.
Mhm.
And there's the last 1, 2, 3, 4, 5 columns are all regarding the number of jobs created.
Right.
And then in the last column is the net number.
Mhm.
Okay? Down in the bottom, could you total that for us? It would be a great number for us to know, you know? That we're.
Where, how many jobs we created?
Hang on, let Jen respond to this.
So it's not totaled there because we're waiting for information from one project, which is significant. It's the EV hotel project. So it's not totaled up there, but it's around 3. I have to report it in Paris. So the current draft of Paris shows the net employment change is 3,304 for all our projects. But that's also a little,
That's what we're here
right, but
for.
that's also a
You know
little
what I mean? It's.
this year,
because Paris has.
Well, net, I think
No.
overall.
of the 70.
Right, of all our projects since, right,
Since those
before this,
incepted.
right, so what that total is the
That's what-
Project employment number.
That's
What's the
on
current
the
number?
projects that are still alive.
Right, exactly.
The number of projects that have been created in Ed's 27 years here.
Oh, yeah.
is, You know, multiples of that. The 3304 is just with respect to the
Well,
ones that
that many in the
are
beginning.
still alive. Well, there was a lot.
Yeah, but the point is the 72 open
Yes,
projects
it's a good.
that we currently are overseeing have led to the creation of over 3,000 jobs.
Over.
And I think that's your point, right? Yeah, that's a good point. It's a good number for us to be aware of.
Yeah.
And there's gonna be a few more than that anyway when the EV hotel.
How many more could that be?
It's in the
Hundreds,
20s, I
right?
think.
Oh, no.
It's a limited service. hotel.
they haven't really been open much, since COVID, so I don't know. This baseline.
Yeah.
They haven't? I've been there. Oh, yeah, on the weekends.
I just want to point out on that schedule in the back, we talk about, that's not part of our order. We don't give an opinion on this. We consider other information.
Yeah.
We do have to look at it and make sure there's no significant errors, obvious errors there. So obviously, some of the stuff we tested as part of our pilot testing, some of the large property tax, sales tax exemptions, the mortgage tax, we did test the large ones to make sure that there's nothing in there that's off by a lot, but it's not, we don't give an opinion on that. So however you want the schedule to show, sort of, Jen can put it how you would like. It's not really up to me at this point. It's your schedule.
It's more of a metric for us. I actually, if we go down that road, we'd love to know what was last year.
Yeah.
In other words, that's really how you want to gauge your 2 years.
Two would include some of the last years too,
Right,
right?
but once the casino was built, which was our big project,
Mhm.
and then you have a consistent amount of normal projects, that number is probably.
Casino project is 1141
Right.
FTEs, for example,
So out of the 3,000.
out of the 3,300.
So the net change is really what would be good to see year to year,
Right.
the net
Exactly.
change.
You're not gonna, it'd be nice to know, but you're not gonna know.
Yeah.
Because you have no idea on some of these that have not all projects have employment goals. They all report, but if they don't have employment goals, it's kind of, it is what it is.
You know, it would be nice if the naysayers knew these numbers. We can get that out
Well,
there.
if they go on to this YouTube thing, they'll now
They
know.
won't. They won't.
The only thing they'll notice is that the casino got a real property tax abatement of $6 million.
Right, that's.
They won't look beyond that.
Okay, Ed, any more questions?
No, I just a point.
That was a great point. Okay, so we've taken care then of Paris. We have a last item of the board member self-evaluations. Do we need to go into closed session on that? I don't think
You
so.
don't need to, you just need to get them to her.
We did already.
I have them, and so the tally is the last page in your agenda packet.
Right.
We can discuss it if you like. I just need to tell the state that you did your self-evaluation and you had any discussion that you would like to have. The numbers are the same. I've got I've got 7 forms that I received. And for each of the 3 agencies, the tallies were the same.
Okay.
I can,
I think really more importantly, were there any areas you feel?
There were no
that
somewhat
problematic
disagree and no disagree.
Mhm.
There were 0 and 0 in the areas of concern.
Okay. That's good. Mhm. Then, and we don't need to vote on it.
No,
So
Jen
does
just-
anyone have any desire to have any further conversation on these evaluations? No? Okay, then we'll move on. That's me. Ignoring it. No, it's not me. Somebody else.
You close one and open another?
So we have to close this meeting. So can I have a motion to adjourn the IDA meeting? So on Scott, all in favor, aye, any opposed? Okay, in the next meeting, do you want to do? Funny. So we just have to start meeting.
You gotta do her.
Get all that going again, you know.
With the members of the public who are not on that.
Here we go.
Oh, stop the recording. Okay. See, we should have the accountants more often. It keeps the public away.
They see it.
No, believe me, I know.